Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. You requested it, so here it is, Tesla's 2022 financial forecast. Just to be clear, I'm calculating my best interpretation of what Tesla have told us. This is not my own personal idea of what I think it might be. It's going to generally be about doing what Tesla said they would, and not too much going wrong for them either, mainly in the way of component shortages like microchips. Perhaps a better way of labeling this would be what Tesla could potentially do next year. We were obviously given a significant update as to the status of what is happening in production and with batteries, which we can use to quantify the numbers we need as best possible. From the sounds of it, Tesla will not be battery constrained. They say they have twice as many batteries from their suppliers from 2021, plus whatever they can also produce in-house for themselves. Also, Model Ys in Texas and Fremont will not be 4680 constrained, as we have been reassured that Tesla has 2170s as backup for these lines. It's possible a lot of extra batteries from suppliers might actually be LFP from CATL, as well as 2170s, and there's a good chance that these factories will actually offer the short-range version sometime later in 2022. In reality, these numbers predominantly come down to the number of vehicles Tesla will be able to deliver next year, so that seems like a good place to start. Let's start with Fremont. With Model S and X, it shouldn't take Tesla too long to ramp up an already existing production line, or lines, for the S and X. I'm estimating a capacity of 30,000 a quarter. I got the number from what they were doing before the Model 3 launch. Also, Elon saying that they plan on twice as much production from the old S and X models, where they were just doing 15,000 a quarter. The first quarter might be a little bit under, but it's possible there may be a few advances to the line too, particularly since 2017, and the capacity is actually a little higher as a result. But I'm going to use an average of 30,000 units a quarter, which comes to 120,000 for 2022. Next up, I count Model 3 Fremont at about 50,000 units a quarter. I'm not sure Tesla overly plan on ramping up many more Model 3s. I think they would just much rather sell more Model Ys, as they're significantly more profitable, and due to die casting, they take up less floor space in the factory. It might be possible that Fremont and Shanghai, for that matter, may even add in the front die-cast mold too. That's 200,000 Model 3s for 2022 from Fremont, and I'm then going to take the Model Y at the remaining alleged full capacity of 500,000 units, minus 200,000, comes to 300,000 Model Ys from Fremont, giving us a total of 620,000 vehicles for Fremont. Although in the past we have heard Elon say the potential capacity for that factory is much higher. However, California isn't really the greatest state to be making cars in the first place. Next up, Shanghai. As we've seen Model 3 hit over 25,000 in a month on several occasions, I would hope that they can average that next year, giving us 300,000 units for the year. Although Model Y is a smaller factory, it is using some more advanced manufacturing techniques, which save floor space, robots, and cost. And Tesla are going to make more effort ramping the Model Y, again, as it is a superior product to the business. We'll lock in 300,000 there for the year too. Now, these two factory estimates are not really far off what I would expect the run rate to be at the end of 2021, so this would really assume minimal ramping or improvements. Tesla are also expanding Shanghai, and we aren't including any of how that could improve the business either. But we've not been given any numbers on these factories growing next year really, therefore we'll just stick with what we've been told. With Shanghai at 600,000 too, that gives us 1.22 million, or just about 100,000 a month. Even that's still a reasonable improvement from Q2, just with these factories, partly due to having S and X model lines back. Seriously, even just having those back on top of what Q2 was, and given their much higher price points and profits, would have substantially increased Q2 profits, especially by another 30 to 50%. Anyone else think that totally is not priced into the stock right now? Okay, sure, by that stage it won't all be Model S plaid sales, although the waiting list is now until February to March, so maybe the long range may not even debut next year. And it might be the same for the Model X. But if we had 110,000 average selling price and 30% gross margin, it's likely the higher end models could have an even higher gross margin, but let's use 30%. That's $33,000 gross profit per car, multiplied by 30,000 sales. Well, that's an extra $1 billion gross. Maybe after tax and some additional SG&A, then $700 million extra net profit might not be unbelievable, which would have taken Q2 earnings from 1.2 billion to 1.9, well over 50% increase. That would also give us a forward PE of well under 100. Yep, doesn't feel priced in to me, but it's the market. It's not always in real time. Okay, our Fremont and Shanghai numbers for the year were always going to be around 1.2 million or not far off. They're fairly easy to calculate, So the majority of the forecasting is going to come down to what we can predict for Texas and Berlin. So what information have we been told about these factories that we can use to estimate what level they will produce next year? According to Elon on the Q2 earnings call, he said, "It is literally impossible to make a specific prediction." So bear that in mind, I'm trying to do something that even Elon has deemed impossible. Elon also said that we feel confident of at least 50% growth next year, and maybe it's 100%. You need a lot of crystal balls to find out exactly what it's going to be. At least 50, maybe 100, something like that. This was possibly one of the most important things said on the earnings call. It gives us the closest idea of next year's numbers. It also gives us an idea of capacity for the new factories. How about we use the 100% growth figure in this model, as the video was more on the lines of what the stock price could do in 2022. But in my opinion, if it's not 100% growth this year, then that extra growth will be carried forward to 2023 due to the batteries ramping up. 2023 should be a really good year. I feel fairly confident Tesla's deliveries for 2021 should be fairly close to 900,000 without any supply issues. So 100% growth of 900,000 comes to 1.8 million. If we subtract our Fremont and Shanghai estimates, then we're at 580,000 units for the new factories. What this actually means, in reality, our previous estimates of each factory were not overly important, as we're working with a fixed total units for the year, i.e., in this model, more deliveries from Texas and Berlin would have reduced deliveries from Fremont and Shanghai. Now, bear in mind, this is the positive case scenario, and we only have 580,000 units from the factories responsible for about 3/4 of Tesla's potential capacity. The new factories have possibly 4 million capacity, yet we're only taking 580,000. But maybe they'll take a while to ramp up, and we don't know yet. We haven't witnessed what Tesla is capable of at this scale yet. Let's just split our 580,000 estimate from both factories and share them evenly at 290,000 each. Now, obviously for Berlin, that will only be Model Ys, but for Texas, we have the Cybertruck to contend with too. I know a lot of people are hoping for about 200,000 or so Cybertruck deliveries next year, but judging by this, it clearly won't happen. But I said judging by this. You don't have to judge by this. There is the possibility that Texas and Berlin could do twice this. These are the inferences we draw from this method of Tesla growing 100% for 2022. But how about we put 90,000 Cybertrucks in Texas anyway? I do think Tesla might have trouble getting started with them, as it's such a revolutionary new design and manufacturing process. But also remember, it's a very simple design too, with no paint, so possibly once it's ramped up, the production speed could be quite impressive. No paint is a big deal. By the way, if you ever wondered why the Model T was only available in black, it's because black was the fastest colour paint to dry. But no paint dries even faster. As Elon says, the best process is no process. And the DeLorean chose stainless steel, so it didn't rust. The Cybertruck is also stainless steel, and all the other Teslas are aluminium, which also don't rust, as it reacts with oxygen to create aluminium oxide, which is like a skin around the metal preventing rust. Rust is not ideal for robotaxis with a life of over 1 million miles. Of course, aluminium is lightweight too. Okay, in reality here, we're just trying to calculate profits. In the scheme of things, if we get the different cars from the different factories slightly wrong, we should still be able close enough in the ballpark to get some idea. Next, we'll use our average selling prices of each factory and model. I've actually consolidated Texas, Berlin, and Fremont with Model Y. I think it's too hard to distinguish them at this stage. I'm also going to include the standard range version in, although I think Tesla will likely have no issue selling long range and performance. I think it possible we might see some standard range versions come out of these factories next year. I'm going to estimate 30% even. This could be argued as being on the low side or the high side. I'm also converting the price of the standard range from Hong Kong, $329,800, and getting US $42,300, which is obviously crazy cheap and more than $10,000 less than the long range. But that is what the conversion comes to. I don't believe it will be this cheap, but I also don't like guessing numbers. In my econometrics models, I always find it best to base numbers from something. That way, you can never differ too far from the standard deviation. As for the Cybertruck, I've gone with 50% dual motor and 50% tri-motor. I can't see much point of producing the single motor anytime soon. It seems to be in very low demand and would produce less profit. But if Tesla are having supply chain issues and not able to secure enough motors, then it may be an option. If they have plenty of motors, then they may only make the tri-motor. Alright, now we can plug in our ASPs into our delivery numbers. Once we calculate all of those, we come to a total of $95 billion. Then we have FSD. I'm reducing deferred revenue by only 40% for next year, Some of that deferred revenue should be released, I would say when version 9 or maybe 10 is released to the public, which we would have expected by next year, if not sooner. Who knows, they may have even cracked the whole thing sometime next year. Anyway, that still only equates to $1.7 billion. Not quite the make or break of the company yet, but with 1.8 million cars, even if every single car paid full price for FSD, then it's only a maximum of a possible $18 billion. Yes, it's possible the prices might increase over time, but it still looks a little small compared to the auto sales. But once it's cracked, then demand will go further through the roof, and the FSD income that matters is the robotaxi potential. Anyway, we're up to a total revenue of $96 billion when you include FSD. As for regulatory credits, we lost Stellantis, so let's drop this down. Now remember people, Stellantis were paying $2 billion a year. Companies like Volkswagen would have had to pay even more if they didn't make their own electric vehicles. So bear in mind, they have ulterior motives in building EVs, even if it's at a loss. It means they don't have to pay for regulatory credits. Get it? Volkswagen can lose billions from the EVs they make and still save money from not having to pay regulatory credits. Regulatory credits are not an essential part of Tesla, although they come in handy to fund factories. Ironically, the factories the ICE cars funded are going to put the legacy autos out of business that much faster. What is it Elon said about irony being the most likely outcome? Right, I get it now. Anyway, I'm just going to use a similar figure to last quarter and scale it to $1.2 billion for the year. I'm also going to be comparing the latest Q2 numbers beside it, except I'm scaling them up annually, so we can see how it compares with 2022 estimates. I'll be using profit margin of 26%. You might feel this is low, but we are ramping up the biggest factories. Remember, Model S made a loss in Q2, as they're not at scale to cover costs yet. I'm not sure this has been considered much by others, but it shouldn't be left out. It's going to cost a lot to get these lines up and running until they break even. Yes, Tesla will inevitably break through 30% margins, especially on the new factories, and especially again when we see 4680s ramping up. That's an auto gross profit of $25 billion, or a 120% increase from Q2. I am expecting to see a bit in the way of energy, particularly as it sounds like Tesla have secured a lot more batteries. I think a lot of these batteries are coming from CATL, as well as other suppliers, as CATL is scaling up significantly. If that is the case, then they're LFP batteries, which are great for energy. Services and other might be about 50% more than Q2 equivalent, due to that many more Teslas on the road. And there we have it. We just broke $100 billion revenue, $108 billion to be exact. Now we have our costs. I think that service will actually break even somewhat. Remember, this also includes Tesla's used car business. I think energy might also be slightly profitable if we're using more LFP batteries, leaving a total gross profit of $27 billion. R&D should be higher due to Tesla likely doing huge R&D on the Model 2 and their new LFP battery, so perhaps $3.5 billion there. SG&A will have increased with all the expansions. I've increased that 50%. Bitcoin. Well, people are now speculating that Tesla purchased 42,069 Bitcoin, which would be totally on brand. But if not that, then it's close. Next year, Bitcoin will likely hit $100,000, which is a couple of $1 billion profit. But I'm just going to leave Bitcoin out altogether, as it's far too speculative. Leaving income from operations at a staggering $17 billion. That's 230% from Q2. Okay, for tax and interest, I've also included $1 billion in depreciation to offset against tax, leaving a net income of $15 billion, still an increase of 210% from Q2, with earnings per share of nearly $13. Alright, what PE are we going to throw at this? Okay, well don't forget, this is the average for the year. By the end of the year, Tesla's run rate could be twice what it is at the start. I think the market could see it between a PE of 150 to 200. You might think that sounds high, but it's possible that Q4 might have an annualized net profit of around $25 billion. Let's take 150 PE. It gives a market cap of 2.25 trillion, or a stock price of around 2,300. But this is 1.8 million cars out of a 5 million or so capacity, with a new factory for a Model 2 on the way, likely able to deliver that number again, implying 5 times more capacity to come in the following few years, not to mention that whole energy side of the business. Amazing, right? No? Not quite as good as some of you were hoping for. Expected some of the numbers to be a bit bigger, did we? Fair enough. But you know why, right? I put the margin at 26%. Well, when they ramp up, it won't take a year or so until that's 33%. Let's just quickly see how much impact this has to everything. The 7% margin increase is all gross profit and ends up increasing net profit by 30% to $20 billion. So the new factory ramping up will be the next way of suppressing the earnings to keep the stock price from breaking out again. Possibly the next breakout won't be until Model 2 ramp up, excluding any major advances in FSD, robotaxis and the energy business. Possibly trading in around a mid-$2,000 price cycle for the period. And then the next breakout? Well, it makes my head spin too much. I seem to have spent so much effort into working out how to make money, I might have neglected to work out how to spend it. Save my Model S Plaid. Again, to be clear, this is not my price target or estimates projection. This is me doing the math the best I could following 100% growth for 2022. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.